Okay, good. Recording started. So today we'll cover a clean tech assignment. We'll do a walkthrough. Apologize, my voice is quite tough. A bit in my tongue, so I might speak with a painful tongue, okay, today. So apologize for that, just in advance. So we'll try to mix it up a bit today as well. We'll do a bit of walkthrough. So we'll play a game, which is a clean tech assignment, the simulation game itself. And we'll watch a few videos as well. Yeah, so hopefully you can understand why I speak, even though with a bad tongue. After today, I will send out users and password to allow group to be able to play as a group. So if you haven't done so already, please make sure your group is registered on the EBIS Hub assignment. I will email. What is this? I will email the group leader. So if you're not put in your email address here, I won't be able to email to you. So please include your email address in case you haven't done so. Let me just paste this link across to the group. If you have not filled in already, please do fill it in, so that I can email the user and the password to the group leader so you can play as a class. So today we'll cover clean tech assignment. We'll go through some lecture notes, just a few pointers and so on. We'll watch some videos showing you how to play the clean tech assignment, and then we'll do a walkthrough of the clean tech assignment, discussing the strategies and so on how to play clean tech assignment. So if you haven't done so, this is, let me just quickly let latecomers in. Today's lecture notes, if you go File Cabinet, it is, where is it now? It's lecture number 3, web design and simulation game. So we'll cover simulation game. We'll ignore the web design. Most of you are going to be using Wix anyway. Yeah, if you're using Wix, just follow the instruction on how to use Wix. In lecture 3, if you skip past the website stuff, yeah, you'll end up at the business simulation game lecture notes. So in this simulation game, if you haven't done it already, we will manage resources as well as demanding in a demanding competitive environment, including financial, human resource, strategies, and other decisions which you need to make, such as venture capital, where you're going to borrow money from venture capital, as well as IPO, initial public offering. So in clean tech assignment is a dynamic simulation, simulating entrepreneurships using a mixture of real world data and so on, gathered and pretty much researched by MIT, Massachusetts Institute of Technology, to build their simulation game. So it's trying to replicate as close to reality as possible. So when you play the simulation game itself, it should be as near to reality as MIT managed to get it at. Okay. So let's go and watch a YouTube, not a YouTube video, a video on how to play the game itself, if you haven't done so already. To get into the clean text assignment, if you haven't done so already, in the lecture notes itself, there is a link. Click on this link, should bring you to this web page here. In this web page, which they basically label as Clean Start, a simulation, a clean energy startup, there should be a link at the bottom to play the simulation. You click on Play Simulation, it will bring you to the clean tech simulation, a clean energy startup. You have a choice when you reach to this web page, play it as an individual, which you can play as many times as you want to practice, or play it as a class. So I will email you users and password where you can log in and play as a class. When you play as a class, you're only allowed to do it once only. Yeah, and your score will be determined when you play as a class. Yeah, you can practice as many times when you play as an individual, but when you play as a class, you're only allowed to play it once. Anything you do when you play as a class will be recorded, and I should be able to access your game on your recorded game on my system itself. So for example, if I log in, let me shrink this a bit. When I log in as a teacher, I should be able to access all your simulation games. So here are some previous student who played the game already. This is back in August. Team called Nail Room, and I should be able to access their simulation. So you see here they played year one quarter. Let's go to no balls. No balls. They play up to year 10, fourth quarter. And I should be able to access their simulation on the system itself. So you play as a class more than once. I should be able to see how many times you played the game itself. So you're only allowed to play it once. So you see here, this is the results from Noble play as class. I can see all their results, as well as their data. Yeah, so what I'm looking for is the founder's net worth. You see here, founder's net worth, at least on year 10, quarter 4, is $500 million US. And you can see all their previous years as well, as you see, by clicking on previous years. So in year 7, they managed to reach around $2 billion US. And then they basically start to lose their market shares itself. So if you haven't done so, please go into the eBiz Hub spreadsheet and fill in your team leader's email, and I will send the user the password to play as a class to the email on the team leader column itself. Okay, so let's watch to see how to play this game. Yeah, so I'll let MIT do the explanation itself. Let me log out. So you haven't done so, you can view the video, the instructional videos, by clicking on View Instructional Video. Let's zoom in.
Hi, I'm John Sturman from the MIT Sloan School of Management. I'd like to welcome you to this video user's guide for the Clean Start Management Flight Simulator. Today, what we're going to do is show you how to log in, how to navigate around the sim, how to use it, everything you need to know except strategy. That's going to be up to you. In the Clean Start Flight Simulator, you're going to be interacting with a simulation model that we've developed. It's a system dynamic simulation model that's based on decades of research, modeling, product development, resources, motivation and behavior of workers, market structure, competition, financial structure, etc. Take a look at my textbook, Business Dynamics, if you want to get more insight into what's going on. To develop this specific model, our team interviewed a large number of entrepreneurs and investors in the clean tech sector, and we have experience working directly with entrepreneurs in that sector. The model itself has a broad boundary. There's, of course, treatment of labor, human resources, your professionals, how you hire them, how they gain experience, eventually choosing to leave the company, or perhaps you might be forced to lay them off, how they gain experience and their productivity and work quality goes up over time. The quality of the employees that you get to hire is part of the model. You offer an attractive, vibrant, exciting place to work, you're going to get a higher quality of applicant than employee. You're going to tend to produce better and stay with you longer. Employee participation in governance matters. Job satisfaction is going to vary based on work hours, the success they have in business, and so forth. And all of this is going to determine their effectiveness in sales and so your people are going to be driving business processes, including product development, customer service, marketing and sales effort. That's going to lead to your ability to win customers. You're going to have to do that by taking people from not being aware of your product and your service and moving them through the stages of awareness where they become prospects and that's hot prospects and eventually customers. That process will be effective based on the product attractiveness and your offer, the price you offer it, your brand equity and reputation, and of course, the competition and its behavior. Customers will generate revenue for you, but winning them and developing and maintaining the product will generate costs. We're going to keep track and report to you your balance sheet, your income statement, your cash flow. We're going to value your firm and show you the number of shares that are outstanding. You're going to be issuing shares even before you go public. You're going to be possibly giving stock options and share grants to your employees. We're going to show you the ownership structure. How much do you as the founders own? How much is owned by VCs? You may go out into the VC market to try to raise the capital you need to build the company. How much is owned by the employees? How much, if you go public, will be owned by the public? And this forms a network of feedback processes that generate the dynamics of your business. You're going to be making a variety of decisions, including decisions about compensation for your people, pricing, where you get your capital from, and how you treat your people. And there's a research base shown here that you can go to learn about the details. Just to illustrate a couple of the key structures in your firm, your product improves over time as the result of product development effort. You will be hiring, if you choose, engineers, and they can improve the product, develop new features, improve the reliability, lower the cost, increase the functionality, and it takes time for that to happen. So you see that delay between the start of a product development process designed to create new features and functionality and the completion of those features to the point where they can be deployed. When you do deploy them, they add to this stock of product features you already offer, and eventually those features become obsolete and have to be replaced by new innovation. Key story here is, of course, it takes resources to do that you have to pay for, and it takes time. On the sales side, it's a similar structure. You've got to move people through that prospect chain. Everybody in the addressable market you begin with, let's say owners, operators of commercial buildings, if your product is building energy management system, they are potential customers for you, but they've never heard of you. They don't even know that they want a building energy management system, perhaps. You've got to get out there with a direct sales force who's going to contact them, who's going to make the case that you've got something that's going to be profitable for them to take, and you've got to move them through that process of increasing their familiarity and comfort, asking what they need to know, providing the answers to the technical and economic questions they have. And as they go through that chain, becoming a prospect, possibly a hot prospect who is close to a sale, finally a sale, adding to your customer base, many of those potential customers are going to drop out along the way. They're going to decide the product's not right for them, your company isn't the right fit for their needs, or they're going to go with a competitor. And even after you've won them as a customer, they could be poached by your competitors and then leave you. So let me give you an example. This is a real startup in the clean tech sector called Hope Energy, located in South Africa. Their business concept is to start to finish do an analysis of any commercial or government, school, hospital facility and analyze its energy needs, analyze the patterns of use, and then provide the right mix of renewable clean energy so that they can have the same functionality or more at lower cost and with less environmental impact. As a startup, nobody knows who they are. They've got to go through this long sales cycle. You can see the timeline here. This takes a long time from the first initial contact, delivering the value proposition, administering questionnaires for the potential customer to find out what their situation is and what their needs are, doing an energy audit, then coming up with the energy solution that they propose, and finally getting a proposal decision by the client. And then even after that, only after that, does revenue begin to flow into the company. This is pretty typical, and it means that there's a long sales cycle that you're going to have to deal with. Putting that sales effort out into the field, moving potential customers through this process until they make the decision, hopefully, to become your customer. These are complex systems. So here's an example of building energy management systems, which will be the context for your company in the simulation. And these systems, there are many and varied ones, but typically they include a variety of elements. They all involve integration of what used to be separate, disparate systems for HVAC, heating, ventilation, air conditioning, for electricity usage, for other utilities, water, and other resources. And systems integration is an important element of gaining efficiencies. And here you see one example. You also need various kinds of models and machine learning techniques, artificial intelligence, that can learn from the experience of the users of the building. When are they there? When do they use power? When are they using the lights? When are they using the air conditioning? When are they using the heating? And then optimize the provision of the resources. So there's an enormously difficult and exciting software challenge here. And in order to implement this, you need sensors and controls. You're going to monitor the performance of the building, where the users are, what are they doing, and then actuate the different systems to provide optimal comfort and do that while minimizing energy use and costs. So that gives you a couple of examples. Now let's talk about how you're going to do that in the simulator. When you get started in Clean Start, you're going to be at the very beginning of your company. You've developed a terrific new technology in the lab to reduce the energy use of commercial industrial buildings. It's a wonderful building energy management software and hardware system, and you're poised for success. You have a high value product. Potential market is commercial and industrial customers. and you're ready to sell it right now today. You have superior features, and you can offer them at lower cost than your competitors. The market, commercial and industrial buildings, is accessible to you, and it's easy to identify good potential customers, prospects that your salespeople can go out and talk to. Your engineers and your salespeople learn over time and become more productive as they go up the learning curve, develop a reputation, become more familiar with the market and the technology. And you've been lucky enough to raise substantial initial capital from your friends and family, from some angels, to give you the working capital you need to tide you over until you can bring in your first customers and get to positive cash flow. That's the base case. Now, if you're playing as part of a class, your instructor may have created different scenarios with different assumptions, and your instructor will explain what those are for you. Let's go to the sim. Okay, so you'll go to the Clean Start launch page in the Learning Edge site, and then click here on Play Simulation. And when you do, you'll come to this launch page for the sim. There are two ways for you to play. You can play as an individual, or you can play as part of a class. If you play as part of a class, that means that your instructor will have set up a class code in advance, setting the parameters and scenario assumptions that you're going to play with. And I'll show how that works in a moment. But for right now, let's play as an individual. When you do, you'll need a screen ID. This will become the name of your company. So why don't we call it Greenway? So let's log in. You could, of course, use your name, any name you like for your company. And you'll get this welcome page. You can read this on your own. It gives you the general setup. You're the CEO and founder of Greenway, and you have this product that's ready to go and can save your potential customers a lot of money by improving the way they manage the energy use of their buildings. You've raised $1 million in seed capital from your friends and family, and you're ready to launch. You've got some cost information and other background information here. Read this on your own, and when you're ready, close the window. Here you see the news. So the local media have reported that you've started operations, you've got an office, and you're ready to begin hiring. Let's take a look at your office. Well, here you are in a garage, you and your startup founding crew. You've got 5 employees, and they are probably your friends, roommates, lab mates, the folks that you created the technology with. You and these folks are the founders and owners of the company. You've got $1 million in cash right now. However, you have expenses and no customers, so you're losing money at the rate of about $180,000 per quarter. This gives you about a year, a little more than a year, before you're going to run out of money. This is the overview page. Before we look at the decisions, let's drill down and see what other information you can access to help you manage your company. First of all, you can get the news anytime you like. And the news not only includes the news about you, but some information about the economy. Here it says that economists suggest economic growth will remain near historical averages. So the economy is looking pretty good. No drop in sight. That's all the news we have at the moment. You can drill down now and see more detail on your company. So let's look at sales. Now, as time goes on, you'll see a graph showing what's happening to all these variables. Here, we're seeing information about the market. We see that there's about 30,000 prospects or potential customers out there that you could potentially sell to. There are 0 active prospects right now because you're just starting and you haven't had any time to send your salespeople out there to contact any of those potential customers. Haven't had any sales, and so there's no sales this quarter and no cumulative sales. You can also look at any of these variables on any of these tabs as a spreadsheet. If we click View Data, you'll see that you've got your 30,000 and some potential prospects and 0 accumulated sales, active prospects, and quarterly sales. And of course, you can copy those data to the clipboard and put them in Excel or use them in any other presentation you might like to. Now let's look at your income statement. Well, here are some graphs showing your revenue and operating expenses. You have no revenue, but you do have operating costs. Your net income, therefore, is negative. You're losing money, and there's no cumulative profit. And again, you can get that as a spreadsheet as well. You're losing about $180,000 a quarter. Cash flow, you've got $1 million of cash. That gives you, at your current burn rate, 1.4 years of runway. 1.4 years at your current burn rate before you go bankrupt, unless you can win customers or raise additional external funding. And you can see that, of course, as a graph or a spreadsheet. You can look at the ownership structure of your firm. What is the valuation of your firm? Now, of course, this is an internal valuation. You couldn't turn that into actual money right now because you're just starting out. But your assessment is the firm is worth about $2.8 million on the basis of your IP and your prospects. And the share price is $2.8 a share. And the ownership structure is right now you and the other founders of the firm own 100% of that. We look at the product. The product you offer, the building energy management system that you offer your potential customers, is quite attractive right now. You're offering your customers a payback time of only 6 years. That's a pretty high return on investment. Your unit costs are $60,000, and your initial price is $78,000, which will give you the margin you need to invest in product development and grow your sales force. You offer excellent customer service, and you're able to save your potential customers an average of 24% of their current energy needs. Let's look at human resources. The attractiveness to potential employees of working for your company is pretty good. The scale here goes from very poor to very good, and you're pretty good right now. As a result, there's no turnover. You and your founders are happy, and you're excited to give this a go. The quality of your employees that you might hire is average, and that'll change as the reputation and working conditions of your company go up and down. And the average work week right now is about 40. It's not likely to stay there. This is, after all, a startup. 4 are engineers, and 1 is a salesperson. And on average, you've got about 2.5 years of experience in the sector. You're not hiring anybody at the moment, and nobody's leaving. Let's take a look at some pro forma projections. Here's your pro forma business plan. You expect that after about 5 years, you will have on the order of 30 to 50 people, possibly as many as 75 people. You're going to be selling between 120 and almost 300 units of your system per year. And you're going to be highly profitable, making about $4.6 million in the base projection with some uncertainty range around that. That's a pretty nice profile. Let's look at your competitors. The payback period that the competitors offer on their system is higher than yours. So you're more attractive. You offer a faster payback. And if we look at the decisions, anytime you like, you'll be able to look at this tab and see what decisions you're making. We'll come back to those decisions in a minute. And then, are you helping to make a better world? Well, here what you see are the cumulative energy savings that you've helped to facilitate for your customers, and the cumulative energy savings that your industry, including yourself and all your competitors, have been able to generate. And it's, of course, 0 at the start. So you can look at any of those tabs at any time, and as you go on, you'll see that these graphs evolve and give you a good idea of what's happening in your business. Now let's take a look at the decisions that you're going to make as the founder and CEO of your clean start, clean tech enterprise. The decisions you make are listed here. First, you're going to make a decision about the price, the cost of your unit to your customers. $78,000 is what you see here, but you're free to set any price you like. In order to find out what price you ought to be charging relative to your costs, take a look at the product tab, and you can see that right now your unit cost is $60,000. $78,000 gives you a reasonable margin to fund product development, sales, and service and support, but it's entirely up to you what your price will be. I'm just going to leave it here at the moment at $78,000. You're also going to have to decide how many employees to hire each quarter. there are two ways to enter your hiring decision. Click on the employee's decision, and you'll see that you've got an opportunity to specify the actual number of people that you want to hire each quarter. So if you click on the total hiring method, you're going to then specify how many new engineers you're going to hire, say 1 this quarter, and how many new salespeople you're going to hire, say 2 this quarter. Put in any numbers you like, and if you want to fire some people, put in a negative number. I'm going to return these to 0. Now, the other opportunity for making your hiring decisions is to select the growth method. Here, what you do is you specify a desired quarterly headcount growth rate in percent per quarter. So you might say, for example, let's grow at 10% per quarter. And then you decide what fraction of those people that you're going to hire are going to be engineers, and the other fraction will be sales and administrative people who can go out and win customers and service your existing customers. So you might say, we'll hire 25% engineers and 75% salespeople. It's entirely up to you which of these methods you use, and you can switch each quarter to whichever method you want. For right now, I'm going to go with the total method, and I'm not going to hire anybody the first quarter. Let's see if we can get out there with our core team of 5 people and sell some product. Another decision you have to make is compensation for the people that you do eventually hire. And you're going to have the opportunity here to set the salary as a percentage of the industry average. And if you like, you can give people grants of stock. This would be an outright grant of shares in the firm. You can also give stock options, which will vest after some period of time and will have a certain strike price. And you have the opportunity to provide profit sharing to your employees. Let's take a look in more detail. Click on the compensation button. And here you see the decisions you're going to make on compensation. So what salary are you going to offer to your new hires, either engineers or salespeople, as a percent of the standard industry compensation for an engineer or a salesperson? You can offer them the standard, that would be 100%. You can say, I'm going to pay you more because we want to get really great people. Or you can say, we're going to pay you less in salary. We're a startup, we don't have a lot of cash, and we might then offer stock or stock options to give you upside potential. So just to illustrate, let's offer 80% of the industry average, and we're going to give people some stock options. Stock options here are measured in the percent of the industry average salary that those stock options would represent in nominal value. Of course, stock options don't vest until some period of time has passed, and whether the value of the company puts those options in the money or underwater, when they come up, that's something that remains to be seen. But let's offer people 20% of the industry average in stock options. That makes 100%, but there's no reason it has to add up to 100%. You want to say, well, those options have an uncertain value, I'm going to offer you more. That's fine. That's entirely up to you. Finally, are you going to have profit sharing with your employees? Well, you're not profitable right now, but if and when you become profitable, are you going to have direct profit sharing? And you can simply specify what percentage of net income will be given to the employees in profit sharing every quarter. Here it's 20%. It's entirely up to you what numbers to select. When you're done with your decision, click Save. And you can change those decisions anytime you like, although if you change the compensation structure frequently, it's confusing and demotivating for your employees, especially if you reduce their pay. You also have the opportunity to go out into the venture capital market and try to win external funding so that your company can make it through the valley of death until you've become cash flow positive. We'll take a look at that in a moment. And then if you're really successful, you have the opportunity to go for an IPO. Well, we've set a price, we've made our hiring decision, we've made our compensation decision. We're not going to go out for venture capital right now. Let's advance and see what happens. So what you see here is you've burned through a little of your cash. Your net income is still negative, but your loss has gotten a little bit smaller. That's because you lowered the compensation a little bit. And you don't have any customers or any revenue, and you didn't hire anybody. So now it's the next quarter, and you can drill down and see what's happening. So for example, let's look at sales. So now we actually have 163 active prospects. In the first quarter, our salespeople have been able to get out there and contact 163 potential customers who are now prospects, but they aren't yet customers. And so our cash flow is still negative. Let's take a look now and see what happens if we make some new decisions. This quarter, let's hire one engineer and one salesperson. And we'll advance. And you're still burning through your cash. Because you've hired, you now have more people. You can see the ratio of engineers to salespeople in this pie chart. Your losses are holding pretty steady at about $160,000 loss per quarter. So you're still burning through your cash. And at this point, let's just advance a few more rounds and see what happens. You're burning through your cash. Your losses are growing as you're hiring. And you just moved to a larger office. That's great. So you now have about 10 people. And in fact, you've just got your 10th employee, and the next day you announced your first customer has just been acquired. So congratulations. And with the revenue from that first customer, your losses are narrowing somewhat. However, you're running out of cash. Well, maybe we ought to go out into the venture capital market and see if we can raise some external funding to keep us going. So you go out there and you do a roadshow for the VCs that you are able to contact and get the opportunity to present to. Your projected cash needs are about $340,000, and you provide them with these pro forma projections, which have evolved from the first ones and show very healthy prospects for your company as you go forward. So you just need a little bit of capital to get you going. So how much capital would you like? How much money are you going to request from the venture capitalists? Well, let's ask for, $600,000. And you submit your request. Now, it takes time for them to evaluate it, and it takes time for you to contact enough VCs and get the opportunity to make that presentation. So while they're mulling it over and your request is pending, let's advance to the next quarter. Unfortunately, you just ran out of money. So you're bankrupt before you were able to get any external funding. Too bad. So at that point, you're free to take a look. Oh, they've repossessed your cash. Too bad. You're free to take a look at all of the data, see what happened. You were never really able to get things going. Although you were headed towards profitability, you were still running large losses all the way through the end, even though you had some customers at the end. Your cash flow was, as a consequence, negative, and you just burned through that initial $1 million before you could get any external funding. How did your people do? Well, working conditions deteriorated a little bit, especially at the end. The quality of the employees you were able to hire wasn't as good as you had hoped. The average work week went way up. People were working very hard on your behalf. And a few people started to quit because they didn't like the working conditions or the prospects of the company. Well, take a look at everything that's happened in your own games. And whenever you're ready, go back and play again. You just played as an individual. You may, if you're part of a course or a training program, be asked to play as part of a class. If you're playing as part of a class, your instructor will have set up a scenario possibly with different assumptions for you to play. And so to play as part of that class, you'll simply click here, and you'll put in your login ID. Your login ID will be provided to you by your instructor. It's typically your email address. So for example, I might be barney@stone.net. And you'll be given a password. You'll enter that password and then log in. And then it's exactly as we just saw. You play the game exactly as if you were playing as an individual, but your results will be stored and your instructor will be able to review them, give you feedback, and even share what's happening in your group in real time as you play. We hope you've enjoyed this quick tour of the Clean Start Management Flight Simulator. Read the user's guide for further details and get in touch with us. Send us feedback by clicking on the Contact Us button on the simulator. We'd love to hear your experiences. And good luck building your business.
Okay, hopefully you guys managed to understand how to play the game yourself. Before we jump in and do a walkthrough, we'll take a 15 minutes break. Okay, so 15 minutes break. Okay, can you hear me? Somebody respond? Hello? Can anyone hear me?
Yes, teacher.
Okay, good, good. Okay, we will do a walkthrough, okay, and discuss strategies. Before we do that, you are welcome to go on Google search or YouTube. The clean tech or the clean start simulation itself is quite a well played simulation, and there are resources available on the internet or even on YouTube. So you're more than welcome to do your own research. For example, if we just jump to YouTube and look for clean start, you see quite a few people have played as well as recorded their or their discussion and so on YouTube. Yeah, and on Google it's the same thing. Clean start strategy. Yeah. So there are a lot of information and material on the internet as well as on YouTube. You can access them in your own time. Okay. So like I said before, towards the start, apologize. I bit my tongue, so I might sound a little bit weird to you. But we'll go through a game anyhow and do a walkthrough, and I'll discuss the strategies and so on as well. So let's choose green tech as stream ID. Anything, any decent name is good enough. Very similar to what you've kind of seen before. A welcome message describing what the simulation is all about. You managed to have $1 million US from your friends and your family, as well as angel investors and so on, to invest in this company, which produce clean technology to help save energy by saving how much fuel is burnt and so on, in terms of cooling as well as heating home or offices or even public places like university and hospital. This news clipping in general describe the new company. Not only that, it described the current economic situation. So the current economic situation suggests that economic growth will remain near historical averages for the foreseeable future. So before the break, you kind of seen the how to use this clean tech assignment. let me shrink it a little bit. I think that's good enough. In terms of strategy, as a startup, you're going to be very short in terms of cash. Yeah, so you want to try to minimize the amount of cash burn as much as possible. By doing so, you will extend your runway years. Yeah? So currently, you can survive almost 2 years, so 1.7 years, given the amount of cash which you have, which is $1 million US. You want to be able to survive, very similar to what the video which we've seen earlier, that the guy went bankrupt because he spent too much money and ran out of money. And not only that, he tried to raise money through venture capital, but it was too little too late. So for all startups, yeah, we want to be able to extend this as far as possible, such that we can create some kind of income and use that finance to finance the growth of the company itself. Yeah. There are no one way of playing this game. There are multiple ways. This is my way. This is one way. Okay. I'm not saying my way is better than your way or other ways, but this is one way of doing it. So in general, you want to minimize the amount of cash burn rate as much as possible. And not only that, you want to increase your sales as much as possible, or chance of sales as much as possible. So your technology is good enough, as the video kind of mentioned. So my strategy would be try to reduce the amount of cash by reducing the salary, and maybe also reduce the number of employees as well. So before we start, let's increase this to 78,000. Very similar to the video which we saw earlier. Let's look at our competitors. Our technology, let's look at view data. Our technology has a better energy saving, almost not as good as the incumbent, better than the incumbent, which only has a 20% saving. We have 24% saving. Other startup competitors are very similar technology to us. Yeah, so they have 24% as well in terms of saving. But with ours, our customers can pay back pretty much all the money which they invest in equipment within 5.7 years, whereas our competitors are 6 years. So our equipment is a lot better than our competitors. Our unit cost is $60,000 US. Since our technology is better than our competitors, we can price them similarly. Yeah, so our competitors are pricing at 78. So we price it the same, but we know our equipment is better than theirs because the customers can pretty much pay back all the amount of money which they invested in within 5.7 years, whereas our competitors is up to 6 years or so. So our equipment is still superior to them. So we price it the same, $78,000 US, but now we need to minimize the amount of cash burn rate so that we can survive until we sell some of our products. So let's jump into compensation. We do the same as the video. We reduce the amount of cash which we pay to our employees. Instead of 110% of industrial compensation, we reduce it down to 80%. So we pay them 20% less cash. We're willing to offer them more on their options as well as profit sharing. Yeah, so to be able to adjust that we're paying our employee a lower salary, we can increase them in other ways, such as option granted to them as well as sharing in terms of profit as well. Typical of technology company, profit sharing tends to be around, on average, tends to be about 15%. So we'll take the average, 15% in terms of profit sharing. In terms of option granted, let's match the industry average and pay them 20%. So they get 80% in cash and 20% in option. And then additionally, they will also get to share 50% of profit of the company as well. So you see here, it's relatively competitive. It's not like we pay them less than the industry average. Yes, we are paying them less in terms of cash, but we make up on the option as well as the profit sharing. But in doing so, we will reduce our cash burn rate itself. So let's save. Initially, we start off with 5 employees. That's more than enough for most cases. So let's make sure that the employees are all 0 total. I don't want to hire more engineer, and I don't want to hire more sales staff for the moment. Okay, let's save. And then let's advance. Our technology is superior to our competitors, and we're trying to be able to survive until our first sales. And hopefully using the profit from our sales, we will use it to grow the company instead of relying on venture capital or even IPO. So let's advance and see how it goes. The economy update. Fed Reserve plan to hold rates steady. Fed chairman expect GDP to grow at around 3% for foreseeable future. So things look good. Our company's launched. That's fine. Economy update. Economics suggests that economic growth will remain near the historical average for foreseeable future. So that's pretty much similar to what we've seen earlier. So we see here, we managed to reduce our cash burn rate. Hopefully we can survive more than the 2 years earlier. Let's have a look in terms of our runway. Our runway has increased to 2 years. So by keeping moving along this pace, we can survive. We have enough cash to survive for 2 years. Yeah, hopefully by then our sales would be. We hopefully will get some kind of sales happening by then as well. So very similar to the video earlier, we managed to get 161 prospects with a market share of around, the whole potential market is 24,000 people, but we only managed to talk to about 161,000 people, sorry, 161 people in general. So we need to talk to more people because the market size is a lot more than that. So maybe we can hire more salespeople. Let's do that. Maybe increase in terms of sales. We can survive for 2 years. Hopefully we can sell within 2 years, sell something within 2 years. So let's increase the salespeople by 1. Let's advance. Economists report economic engine continue to hum at historical level, very similar to the last quarter. No new news this quarter. And we see we study our burn rate. Yeah, we can survive just slightly under 2 years now. So it's 1/4 is over. So instead of 2 years, we dropped down to about 1.6 years or so. Yeah, so we survived past 1/4, given that our burn rate is the same. And not only that, we have increased by 1 employees. Yeah, so this number of employees has ticked up to 1 more person. So you can see here, there are 6 employees. There's you, there's me sitting in the corner. 4 admin staff and sales staff, and 2 engineers. Let's look at the sales. Sales is very important. We managed to, or the sales staff managed to talk to 222 active prospects, but the size of the market is also increasing as well. So hopefully our increase here is faster than the increase here. So you can see the steepness of this curve is higher. So we are growing with the market. Not only that, we are growing faster than the market as well. So let's continue anyway. Let's advance for another quarter. News very similar to last quarter, so we'll ignore that for now. Our costs will start to increasing. Well, I've forgotten to remove 1 extra sales, but they basically managed to accidentally hire 1 more extra staff on the sales side. Yeah, so let's change this back to 0 anyway. Yeah, we'll keep the extra sales staff. It's always good to have extra sales staff. We're at the stage where we want to increase the number of sales prospects anyway. So if anything, I need to increase this number. But not only that, I need to manage this number, the burn rate, such that I can survive until the first sales, and still I manage to make some profit to make the company more sustainable. Let's check on the number of years I have left. I have 1.5. I can survive enough cash to survive 1.25 year. Yeah, so 5 quarters in general. So hopefully, if I can make some sales within 5 quarters, then hopefully things will turn around. But if I don't make within the 5 quarters, I need to start to look at venture capital or foundry staff or something, such that I can survive until I make some kind of sales. So hopefully I can make a sales within the next few quarters, hopefully. Let's check on sales. Sales are increasing. No sales in terms of actual sales yet. We are growing, and we are growing, still growing faster than the potential market size as well. So as long as I keep this growing faster than this here, hopefully I will get a sales in. So typically it will take about a year or so to make some kind of sales, but I can survive for another 5 quarters. So hopefully I will make a sales within the next quarters or the following quarters, hopefully. If not, then I need to start to raise more money from venture capital. I don't need to change this here. Sales, employees, keep them as the same. 6 employees, and then I just need to advance. Same news again. I'll skip through this. Nothing changed there. Number of employees stays the same. No sales yet. Cash is burning down. I should have about 1 year left in terms of cash. So I have about 1 year left to run in terms of cash. If I don't get any sales, then basically I will run out of cash and become bankrupt. Yeah, so I can survive another 4 quarters, hopefully. Let's check on the sales. Number of sales prospects are still increasing. Hopefully I will get a sales within the next quarter or so. If not, then I need to start to talk to venture capital. Yeah. So I have at least 4 more quarters, 4 more attempts before I need to raise more money. So let's advance. Any sales yet? No more. No sales yet. I'm getting to risky kind of area now. I'm running out of cash. I don't have a lot of cash left. I can survive for another 3 quarters, but then I'm going to run out of cash quite soon. So it's gone down to about 3 quarters. So I need to start looking in terms of raising venture capital. Yeah, so typically I want to raise money before I run out of money. If I run out of money before I raise money, similar to like the video, I will go bankrupt. So I'll start to talk to venture capital. Yeah, it'll take me a quarter to raise some money anyhow. So I need to start to look at this way before I need the money itself. So let's talk to VC. If I don't get enough sales, then I can always get more money from VC. So let's go to VC. Projected cash, they will need. They expect me to need around like $330,000 US. So maybe I'll request about $500,000 US. I can ask. Doesn't mean that I will borrow money. Yeah, but in case, just in case, I run out of cash without any sales, then I can always borrow money itself. So submit requests. It doesn't mean that I will borrow money from them. I just request a valuation. So it's pending. So I proceed. Hopefully I will get a sales. Let's check on the sales tab. Our sales prospect is still increasing. We're about 1K now. We're growing faster than the size of the market itself, which is good. Hopefully, I will make a sales next year. Not next year, but next quarter. And not only that, I can survive for another 2 quarters, if I believe, 3 quarters, yeah, before I run out of money. So give me plenty of room. In case I run out of money, I can always agree on the VC financing. So let's advance. I managed to make a sales, but the sales does not mean that I'm profitable yet. Yeah, it will help. Some profit will help to reduce the amount of cash burn rate, but it might not allow me to survive another 2 quarters or so. So let's check the situation first. So VC, they will lend me money, but it means that I will have to give them 19.1% of my company. So for now, I might not accept it yet. I'll shut this down and check on my situation and then make decision for my situation. So let's close this for now. I could always open up again and make my decision later on, but let's check our situation at the moment, whether I should take up VC financing or not. Yeah, I have enough cash, but how long can I survive for? I can survive for another 2 quarters. Yeah, hopefully I will turn a profit by then. Yeah, so I can take another quarter. I can gamble for another quarter. Hopefully, I will make enough profit to survive from there on. But before I do that, I want to be able to open my option in the sense that worst case scenario, if I run out of money, I can always switch to venture capital. So let's do a counter a counter pitch to the venture capitalists. Instead of asking for, they offer me 400,000 for 20%. I will ask them for, say, 400,000 for 10% of the company. So I offer them half of what they are pricing my company at. Hopefully, well, it's up to them if they accept or not. If they accept, we'll get more cash, but at a lower rate. But not that, I know that I can survive for another 2 quarters anyway. So by then, hopefully, my situation will change. But then, worst case scenario, I can always accept and get money from the venture capital as well. So let's submit. And then let's advance. I can survive for another 2 quarters. Consumer confidence is strong. First customers acquired already. We acquired that. That's fine. Update economy. Venture capital. We can come back to this whether we accept it or not later on. I think we're in a healthy position. How long can we survive for? We can survive for another 2 quarters. Yeah, so it's not a major issue still. We don't need financial yet, VC. We can survive for another 2 quarters. Our sales is still increasing. We probably need to think about hiring more staff. Yeah, we managed to sell 4 units, each unit around 78,000 per unit. Let's check on terms of our competitors, see how we compare with our competitors. Our equipment are getting worse and worse than our competitors. Our competitors, their payback is 3.3 years, while our payback is 3.8 years. So our equipment is worse than our competitors, but not only that, our competitors are selling their equipment at a lower price than us. So we need to be able to compete with them somehow. So we reduce our price down to $75,000 US. So it's going to be cheaper than them. And we need to invest in more engineers. The more engineers which we have, the better in terms of technology which we will have as well. So let's do that as well. So in combination of, we're in a healthy position. We can survive for another 2 quarters. So that's totally fine. So let's hire 1 extra engineer. And let's reduce our unit price down to $75,000 US. Yeah, to be able to, for us to compete with our competitors, not only with the technology, but also the unit price as well. So hopefully, our customers still looking and interested in buying our product still. Everything stays the same. We can survive another 2 quarters. That's totally fine. Let's advance. We still have not managed to bring in a engineer yet. We're still looking. We want to hire more engineers. Let's look at human resource for now. We managed to lose 1 employee, it seems like. Number of engineers, sales staff, 2.1, 4.3, that looks fine to me. We try to get more engineer in because our engineers are working overtime at around 70 hours per week. That's too much. So we need to still try to hire another engineer. Let's check on the cash flow situation. We can survive now because we managed to do a lot of sales, 9 sales. We can survive for another 1 year or so. We managed to extend our runway, as you can see here. So we can focus more on hiring more people now and try to grow as quickly as possible. Check on the sales tab. We're growing still. Prospects are still increasing compared to the market shares. The market shares are flattening out, whereas we are getting more and more in terms of prospects. Yeah, so let's try to keep on improving our technology. Let's check on our technology as well. Our price is lower than our competitors, but our technology is still worse than our competitors. So we need to improve on R&D, invest more in terms of research and development. So we need to be looking to hire more engineers. So let's do that. We want another 2 engineers and maybe 1 extra sales staff. We want to be looking for growth. Now we have money, we have profit into the company already. Yeah. So let's do that. Let's advance. Our burn rate has become positive. Yeah, so we're not burning any money. We're actually making a profit now. So we need to be able to spend this amount of money. So hopefully by hiring more employees, we can spend this money. And we haven't really managed to find anyone yet. Yeah, we're still on 6 employees at the moment. We want to grow. Maybe we need to start looking in terms of changing our compensation as well to attract more staff. So let's do that. So maybe not 80% anymore, increase it to 90%. Hopefully our salary is a lot more attractive, and hopefully we manage to bring in some engineers. You know, we need engineers and we need more sales staff. We need to grow the company as well because we are making a profit. So let's do that. We have managed to make more money, but we have not managed to attract more staff yet. Yeah, so let's try to attract more by increasing the salaries as well. Yeah, it's a very competitive market at the moment. So let's increase this to 3 and let's increase this to 2. We want to grow fast and maybe increase this to 100%. We have cash to spend, so we want to attract people. So now not only our product is competitive in terms of price, but also our compensation is competitive. Hopefully we can attract some employees now. We have record in terms of revenues, but we have not managed to attract any employees yet for some reason. Let's check on the graph. Work hours, they actually are decreasing. We are hiring, but we are losing people as well. So the turnover are increasing. But we see our job attractiveness are increasing as well. So hopefully this keep going up. In terms of very good prospect or good job attractiveness, we can hire more people, hopefully, and keep them as well. At the moment, we are actually hiring people, but we are losing them as well. So that there's a turnover of around 12% or so. It's not that we have not managed to hire anyone. We have, but we are actually also losing people as well. Hopefully things will turn around, especially with the attractiveness increasing and the number of hours which the engineer and the sales staff are decreasing. So let's continue as is. Hopefully the situation will change. Let's look at the sales as well. We want to be able to pick this up, above this potential market size. It's been flat for quite a while now. We want to turn this around. So hopefully our human resource in terms of hiring more staff and the situation in terms of human resource actually are changing. So it is improving, the quality, employee qualities is improving. So let's advance. The office is getting bigger and bigger. We still have 6 employees still. So hopefully we can grow our office with more employees. We managed to get some more staff. You can see here we have 8 staff now. So the situation is changing, but our income is flattening out. So we need to improve our situation. Let's look at our competitors. Payback years, our equipment is still below the technology of our competitors, and our price is more expensive overall. So we need to start to worry. Our equipment is less competitive compared to our competitors. So we need to focus on improving our situation. So maybe reduce the price down to 72.5 thousand US dollar. Because don't forget, our equipment is technically less than our competitors. But we have changed our situation. We have hired more engineers to improve or to increase our technology as well, or our R&D, our research and development. Let's continue on hiring more employees and hiring more engineers. And let's look at human resource just to see the situation that we actually are improving. Yes, we are improving. So hopefully we'll manage to hire more engineers and improve on our R&D as research and development. So let's advance. We're growing, but our sales is plateauing, and not only that, our income is plateauing. So we need to figure out how to fix that. Okay. Our sales prospect is plateauing. I think we did not change the price. We need to make this more competitive, our product more competitive, by choosing a price lower than our competitors. We'll reduce the price of a product down to $72,500. Let's check on our competitors. Our competitors is more expensive than us. We have invested in more engineers to do more R&D, so hopefully we can reduce this payback period below theirs, hopefully, as soon as possible. Our equipment is still more expensive than their equipment as well, and we're not making as much margin compared to our competitors. But hopefully, by reducing the price, our customers will be able to see that our products it's maybe more competitive. So maybe we change this to 72,000. Let's advance. We're still growing our team. Our profit is plateauing. So maybe we need to reduce the amount of employees which we are hiring. Let's put this to 0 for now. Stop the growth. Our sales is still increasing. So let's check on our sales. We're it's still plateau. I want to grow this faster than the market size itself. So that it's still plateauing at the moment. Hopefully our investment in R&D has changed, and that we are catching up with our competitors in terms of technology. So this has gone down to, previously it was a difference between half a year, now it's 0.4 of a year. Yeah, so our technology is catching up with our competitors, and we're still pricing our equipment below their values, below their price as well anyhow. So let's continue. We'll keep the situation the same. Hopefully our technology will pick up, because now we have a lot more engineers. We have 7 engineers and 8 sales and admin staff. Let's advance. Our profit is increasing once more. Our sales slowly increasing, so it's not plateauing. Our staff situation is improving. It's flattening out, which is what we kind of expected. Let's check the situation in terms of our human resource. Our attractiveness, our company's attractiveness is still very high, so it's good. Hours worked by our staff, both our sales staff and our engineering staff, are increasing, so we need to hire more staff to bring this down. We're losing less employees, which is good. In terms of sales, we need to hire more sales staff. Yes, we need to grow this active prospects. So let's do that. Hire more sales staff, hire more engineers, and then compete on the technology as well as the price as well. So let's look at the technology. Are we catching up with our competitors? We are catching up. So before it was 2.2 and 1.8. Now it's 2.1 and 1.07. Yeah, so we're slowly decreasing our payback period, but our competitors are decreasing their payback period faster than us. So we need to focus on R&D to improve that situation. So let's hire more employees. Maybe 5 more engineers to improve our technology, and maybe 5 more sales staff. And we want to grow fast. Number of employees has jumped substantially. Sales is still rising, good. Profit is still rising. Let's check the situation. It'll take a while for the sales to kick in. So our graph will not change yet. We hire more sales staff, so this is slowly turning. You can see it's slowly turning upward, where compared to the market itself is flattening out. So hopefully our situation in terms of sales are improving. Let's check on our technology. Okay, our technology are catching up with our competitors. Before it was 0.4 years apart, now it's 0.3. We are slowly catching up, but our price in terms of our price per unit is still higher than our competitors. So maybe we want to reduce this down to 71,000, because don't forget, our equipment is lower tech compared to our competitors. So let's change this down to 71,000. In terms of more employees, I don't think we need to hire too much employees now. So let's reduce it down by 2 and 2. Everything else stayed the same. Profit is increasing. Sales unit are increasing. Our sales situation are increasing. Looking good. Let's advance. Okay, our profit is still increasing. Our sales still increasing. Number of employees still increasing. Everything's still looking good. Let's check on our sales. Good. We're growing faster than the market, which is good. And let's check on our technology. Our technology is 1.9 and 1.6 is still 3.3 of a year apart. Our price is more expensive than our competitors. Maybe we'll reduce this down to 70,000 as cheaper, slightly cheaper than our competitors. And hopefully our engineers will catch up with our competitors, our startup competitors. But don't forget, we have also our brand as well. So we rely on our brand. Our technology doesn't have to be more expensive compared to our competitors because our staff, our customers can recognize us by our brand. Yeah. So our price is slightly cheaper. Our price is slightly cheaper than our competitors. But I need to invest in more engineers as well. So let's change the employees. We are growing still. Our profit is still growing. We don't want to keep too much profit. And hence, we need to spend a lot of this profit by hiring more staff. So let's increase that. So let's, instead of changing numbers here, we'll change it to percentage growth. So let's grow by 15%. In terms of staff, I want to keep it around sort of like engineers around 50-50. Yeah, we want to grow more technology. Maybe 20%. Let's change this to 20%. And try to grow the engineers. Yeah, don't forget, we have less engineers and sales staff. We want to increase engineers so we can improve on our technology. Let's advance. Check on human resource. Prospects attractiveness still very high, but our engineers are working very long hours. We need to hire more engineers. You see here, yeah, engineers are the yellow, and engineers are working almost 80 hours per week. We have enough in terms of sales staff, so we might not need to hire more sales staff. We need to increase our engineers as such. Quality is still increasing. Number of sales staff being lost is very low still, which is quite good. In terms of sales, are we still beating the market? We are still beating the market. The market is flattening out, but we are growing in terms of our sales prospect. This is good. Let's look at competitors in terms of our technology. How is it compared to our competitors? Our products is cheaper, but none of that, our technologies are catching up with our competitors. Before it was 0.3 years apart, now it's 0.2 years apart. So let's still increase engineers and reduce our sales staff, okay? Let's do that. So engineers, maybe 80%, and sales staff, 20%. We still want to grow around 20% per year, so let's do that. Let's check the situation. We're on year 5, quarter 2. Situation is still quite good. We're making quite a decent amount of profit. Our sales are still increasing. Our number of staff is still increasing. Our sales funnel is still increasing, which is good. And our product is still competitive, which is quite good. Let's advance. Let's see the situation. Our profit is still growing very fast. We need to spend more of these money. Our sales is still increasing. So let's check on sales. I think the internet might be down or something. Oh, here's something happening. Sales. We're still growing faster than the market. Yeah, the market is growing very little amount, whereas we are growing faster than the market in terms of prospects. So this is good news. Hopefully our number of engineers, the hours engineers are working is reducing. We're trying to hire more engineers. Yeah, it's slowly turning downward, which is good. Prospects, job attractiveness still very high. We're not losing a lot of employees. And in terms of our competitors, our technology is still relatively quite good. Are we still catching up with our competitors? We're still 0.2 years apart. Our pricing is still slightly higher than our competitors, but we can depend on our brand still. So we'll keep it going as it is. We don't need to reduce the price itself. Our brand and our sales are doing quite well anyhow. Let's advance. Our net income is still increasing. Number of employees still increasing, which is good. Maybe we need to increase the number of employees as well. Our sales is still increasing. Let's check on our sales prospects. We're still growing faster than the market, which is good. Our human resource. Situation is still good. Engineer hours working is reducing, which is good, looking good. Number of employees lost, not that many, which is still good, looking good. Let's check on our competitors. Our competitors, how do they compare to us? Are we catching up with them? We are pretty much catching up with them. We're only 0.1 year apart to them. They managed to reduce their price down to 69,000. Let's reduce our price as well. Our technology is slowly catching up with them. Yeah, our payback years is only 0.1 year apart. Yeah, so maybe keeping the same number of engineers is good. Yeah, so this is about right. So let's change this into 50-50. Let's change this into 70,000. That's about right. Looking good. Still year 6 at the moment. Prop is still growing. Sales growing. Technology is improving. Human resource looking good. Everything seems to be looking good so far. Let's continue. Our profit is growing to 1.2 million per quarter. So it's still improving. We need to hire more staff, I presume. Number of staff is still growing. Sales is still improving. Situation still improving everywhere. Yeah, let's check on our situation. Make sure our sales is growing faster than the market still. Yep, we are managed to gain a lot of the market shares. Yeah, the market is not growing that fast. We are growing faster than the market, so we are managed to steal a lot of the market from the other competitors. Let's look at our equipment. Is it technologically better or worse? Technologically, we are almost the same as our other competitors. Yeah, because we have a lot of engineers. Our engineers are improving on our equipment. So our equipment's payback years is the same as our competitors, and we are improving substantially. We need to catch up with the incumbent competitors as well. Our price is about right. Yeah, it's not too expensive, not too cheap. Our equipment is improving in terms of technology. We can depend on our brand to grow. So that's not a major issue. Let's check on human resource. In terms of human resource, our attractiveness has increased from 3 to 3.1. So we're actually improving. The number of hours worked by the engineers are reducing, which is good. Maybe we need to reduce the rate at which we are hiring. So maybe not 20%, but down to about 15%, say. So we're hiring too fast, maybe. So let's do that. We're still growing anyhow. Our profit is still increasing anyhow. So let's tweak this a little bit. Yeah, instead of 20%, or maybe we'll keep it at 20%. Our profit is still increasing. We need to spend a lot of these profits, yeah, in terms of increasing our asset size. Yeah. So let's keep at 20% growth still. Let's advance. Yeah, we're still growing. Our sales still growing. Net profit is still growing. Everything seems to be growing. Job prospects are growing as well. Let's check on the sales. We're still faster than the growing faster than the market. We're stealing. We managed to obtain 1/8 of the market shares. Yeah, so that's about 15% or so of the market shares of the whole potential market. We have 10,000 prospects out of an 80,000 size in terms of the market itself. So we are eating away on our competitors. Let's check on our technology. Our technology, we managed to lose out to our competitors. Our competitors managed to decrease it down to 1.5. We still at 1.6. So we need to invest in engineers, in R&D. Our product's still more expensive than our competitors. So maybe we can reduce this down to 69,000, say. To make our product more competitive. Let's check on our human resource. Are we still looking good there? Still very attractive, which is good. We're hiring more staff, still good. Number of hours worked by the engineers are reducing, which is good. We're still investing in engineers. That's why these numbers are decreasing. So it means that we are improving on our R&D. So we should not worry too much about the R&D numbers, the 1.5 and 1.6 numbers. Our engineers are still higher than average anyhow. Eventually, we will catch up. Our products at the moment is cheaper than our competitors anyhow. So we'll keep on doing that. Yeah. So our energy savings is 61%. Our competitors are higher than us, but hopefully we will catch up because we do have a lot more engineers. Let's check on our sales, make sure that we actually are still winning the market shares. We're still growing faster than the market, which is good. We're eating away on our competitors' market shares. Let's advance. Profits around 2 million per quarter. That's still increasing. Number of employees still increasing. Sales is still increasing. Everything's still increasing. So maybe we need to increase the number of hiring as well. Our job prospect is still very high. Very high. Our works per week is still decreasing. Yeah, engineers still decreasing. So it's about right. Number of people lost in terms of turnover, not too high. It's still decreasing, looking good. Competitors, we should be catching up with our competitors quite soon, which we have. So 62. Pricing still higher than our competitors. That's totally fine. We can depend on our branding still, so we can keep it at this particular level still. But our technologies is improving. Our engineers are improving. We can do an IPO now, but in general, what do we need to do the IPO for? We don't need more cash to grow. Our cash position is still very good. There's no need to do an IPO at all. Check on the sales. Our sales should be improving given our technology and our price. We are still eating away on the competitors. From 10,000 now we are 13,000 prospects, where the market's only 80,000 still. So we're actually improving. The picture is still looking very, very good. Yeah, so let's eat away on the our competitors' market shares. Let's continue to do that. Maybe we need to grow. We need to spend more money. Our profit is still too high at the moment, so maybe not 20%. Maybe increase it to 30%. Engineers are catching up, so maybe we don't need as many engineers. So let's decrease it down to 30%. Press save. Everything stays the same. Advance. Yeah, we're still growing. Our profit's still growing. Everything seems to be growing. Everything seems to be looking correct. Let's check on our competitors, whether we have beaten them yet in terms of our technology. Hopefully we have. No, we're still equal to them. Our pricing is still slightly more expensive than them, but that's totally fine with our branding. In terms of human resource, everything seems to be similar. Yeah, we're hiring more staff, so hours work per week are decreasing. Quality, attractiveness still very, very high, 3.2. Number of employees lost is still very low, and we are gaining on market shares as well, hopefully. So market shares still 80,000. We managed to increase from 13,000 up to 17,000. Our market gain is improving massively. Let's keep it at that situation. We're in year 7 at the moment. And our companies are growing very, very fast, as you can see here. Advance. Everything improving. Everything still increasing. That's good. Let's look at our competitors. And technology is still as equivalent to our competitors, although our competitors' price is slightly cheaper than ours. We can still depend on our brand. Yeah, so let's keep our price as is and rely on our branding. Our human resource still improving, I presume. We are still high quality 3.2, which is good. Number of hours worked per week are still decreasing, hopefully. Still looking good. It's about average, industrial average. Still looking good. Number of employee loss, still not very high at all, which is still, which looks good as well. We're having too many engineers at the moment. Maybe we need to start to reduce the number of engineers. You can see here, engineers' hours work per week are much lower than the admin staff. So we need to increase our admin staff as well. In terms of market shares, are we still growing our market shares? We managed to increase our market shares from about 15% up to about 20% now. We have 20,000 prospects when the market only have 80,000. So we have a quarter of the market and we're still growing. So let's hire more sales staff and reduce on the engineers still. Yeah, engineers still very high. So let's reduce it down to maybe 10% and start to grow our sales staff. Everything else looking good. We're in year 7, quarter 1, advance. We're still growing very fast. Everything's going up still. Let's look at our competitors. Our technology hopefully is improving. Still competitive with our competitors, although price is beginning to depart from each other. So maybe I need to reduce the price, to be able to get closer. Our branding maybe not as good to have this big differential in terms of price. So maybe reduce our price down to $67,000 US. Yeah, our technology is the same. We have the same amount of savings and so on. Our human resource is still good, hopefully. 3.2, still good. Number of employees, hours worked per week. Let's have a look, situation. I'm hiring more sales staff and reducing in terms of engineers. So hopefully this situation will change. You see the sales staff started catching up with the engineers now as well. So it's getting there. It's approaching each other, conversion to each other. Check on the sales. Am I still growing? I'm still growing. I'm catching almost, hopefully I'll get 50% of the market soon. Yeah, so I'm still growing. So by increasing sales staff, hopefully the active prospects still increase. Yeah, so let's check on the pricing. Let's make sure the pricing is correct. So 69,000. Do I want to keep it the same price or do I want to make it more competitive? I want to decrease down to 67,000, yeah, to make it more competitive compared to my competitors. So 67,000 US. Let's advance. Everything growing still. Good, good, good. Check on our competitors. Our technology has improved. Now our technology is even better than our competitors. Yeah. Our payback years is 1.4, whereas our competitors is 1.5. Our products is cheaper and better, so that's much. But although it's more expensive still than the incumbent competitors, even though their technology same is about the same as us. But we are looking on branding. Hopefully our branding is a lot better compared to our incumbent competitors. Let's look at human resource. Human resource looks almost the same, 3.2 again. Our situation is good. We're paying good enough to attract employees. Number of hours worked, both our sales and admin staff is the same. Admin staff, the green, is reducing, so maybe we need to balance these two. The green line is decreasing faster than the yellow line, so maybe we need to reduce the amount of sales staff which we are hiring. In terms of our sales, are we still beating the market? The market is 80,000 and we are leveling off, so we need to start to worry about this now. So we're leveling off around sort of like 30,000. So we need to look at our competitors and so on. Leveling off isn't a good thing. We need to work on that. The issue is not our staff, it's about our investment, most likely. So let's check. Our pricing is still cheaper than the competitors. Our technologies is better. Okay, our situation is still quite good, relatively quite good. So let's change employees. Growth rate 30% is about right, but we want to switch this to maybe 50-50. And maybe we want to reduce the headcount instead of 30%. We need to start to worry. Maybe we're growing too fast for the market. Let's reduce our growth rate to 20% instead of 30%. Let's advance. Okay, everything is headed upward, looking good. Let's check on sales. Hopefully we're still eating away on our competitors. 80,000, are we growing faster? Uh-oh, we're having a problem here. We need to start to worry quickly. In terms of human resource, 3.3, our attractiveness is improving. So it's not human resource, it's an issue. Number of hours worked per week is very low. So it's not a major issue when it comes to human resource. So it's got to be competitors which are the problem. Let's check on the situation of competitors. Our equipment is as good as competitors. Our price might be too expensive. We need to do something drastic. Maybe reduce this down to 65,000 US dollar. Let's check on our share price. Net worth, founder's net worth. 1.3 billion US dollar. So I'm right at the top there in terms of market shares. Hopefully the situation has changed. I've changed the price down to 65,000. Hopefully the sales should be changing around and hopefully it will increase once more. Our technology is still quite good and our price should be a lot better. So hopefully this will change. I'm hoping it will change. So everything seems to be increasing. Has the situation of sales changed? I'm not turning this around, so I'm in a major problem at the moment. my competitors are catching up with me, so I need to change that situation around. Let's check on the technology. Technology-wise, we're about the same. My price is still lower than my competitors. Maybe I need to drop it down below my incumbents competitors as well. Maybe I'll change this to 60,000. In terms of employees, I want to freeze the hiring. Yeah, employees isn't the situation at the moment. Yeah, isn't a problem at the moment. So let me freeze employees and reduce the price. Hopefully the sales will turn around. Year 8, my profit is decreasing. My profit is decreasing. My sales is decreasing. It's not good. Number of employees is decreasing, looking bad. Situation sales, it's flattening out. So hopefully I've managed to beat the issue. Yeah, it's slowly flattened out. Before it was very steep, now it's slowly flattened out. Hopefully the situation has changed. Main reason why my profit has dropped because I dropped the price. Yeah, so my margin is a lot lower, which is totally fine. I'm trying to gain back the market shares. Yeah, so 60,000 should be fine. Human resource situation, it's flattening out here, so it's not a good sign. Still 3.3, still very attractive. This number is quite good still, so I'll keep the number of employees the same, although people quitting on me are increasing. In terms of competitors, my technology has improved substantially, and I'm more competitive in terms of price compared to both my competitors. So hopefully the situation will change. Now I'm cheaper and better than my competitors. Hopefully sales will change as well. Internet's a bit slow. It's very slow for some reason. Okay, something's happening. Okay, good, good. Switch to overview. Anyhow, we run out of time anyway. I think you managed to get the gist of the idea on how to manage things. Yeah, very important. You need to manage the sales, you need to manage human resource, and you need to be able to manage your pricing and your technology as well. Those are three very important metrics. You can see my sales situation is flattening out, so I'm not losing market shares anymore, hopefully. I think you guys managed to understand the gist of the things. Yeah, so focus on pricing and technology, human resource, your cash situation, especially towards the beginning. Yeah, later on, this becomes less important. Later on, sales becomes a lot more important. Yeah, so let's check on my my net founders worth. Should be around about $1 billion or so still. Founders net worth is about $1 billion US still, because I managed to lose a lot of these sales. Yeah, the market shares itself. So by focusing on the sales, by change in your technology and the pricing of your product, you should be able to gain back the prospects, the number of prospects. Okay, any question from anyone? Okay, if there's no question, I will see you next week. Hopefully you managed to understand at least the kind of strategy you need to follow when it comes to clean tech assignment. Don't forget to register your group leader's email so I can email the users and the password to the group leader. Okay, if there's no question, I'll see you next week. Bye-bye, everyone.
Goodbye, teacher.